What's up, YouTube? Today we're going to kick it off with a very, very scary chart, perhaps the scariest chart that I've seen in ages. And that chart is this one. And what is so scary about this chart is because the last two times we've reached this level was during the Great Depression and during the dot-com bubble bust. And what this chart is it's showing you how concentrated the entire stock market is. Meaning that the top 10% of the largest, so if there's like 100 stocks, right? We're talking about one stock. How much is that one stock out of the 10 contributing towards the entire market cap of the entire stock market? And we are we are above 75%. So imagine if there is 1 out of 10 stocks, right? And that single one is doing 70%, 75, greater than 75% of the entire, the rest are just tiny little droplets. And why that is so scary is because that tells you how lopsided everything is, particularly today. In today's world, it's called the Mag 7. Back then in the year 2000 dot-com bubble, it was the dot-com companies like the Cisco's and remember Pets.com and all that. Today is the Mag 7 driven particularly by AI, the new dot-com. But we're even more concentrated now than we were back in the dot-com bubble. And the only other time that it was that concentrated was back in the Great Depression in 1928 and 29. And so look, let's hope history doesn't repeat itself over here, but basically when everybody's on one side of the equation, bad things tend to happen. And we've never been this lopsided in history, ever. So all it's going to take, right, is some small little thing, and that's just going to light a firestorm. It's like, picture being in a movie theater that's like way more packed than it should be, right? The most packed that it's ever been in ever history, right? That you're basically sitting in that movie theater right now. And, a little like somebody yelling fire or somebody seeing smoke and everybody rushing to the exits. That's basically what is going on right now. The configuration of the stock market is essentially that in a nutshell. And that scares the crap out of me because all it's going to take is one little whiff and everyone's going to hit and so anyway, keep in mind, this is the setup we are in right now, okay? Now, does this mean like, in the next hour, in the next day or week that we're going to come crashing down? Not necessarily. Nobody knows the future. But what it does mean is once the smoke starts happening, we are going to see a massive, massive move towards the exits. Make no mistake about it, that's just human psychology. And if there's one thing that never changes over time, no matter how much technology innovations we create, it's human psychology and human mass behavior. Now, if we look at, if we zoom in and look at the price action, right? Some people like, okay, this account's saying, hey, you look at this chart and it's like, anybody saying this chart is nothing but going to go up and to the moon is an idiot. Well, sure, if you look at it from that point of view. But then if you look at the divergences that are going on with the relative strength index, and it is something that you have to take a look at. Look, we had a little top here and then we made an even higher, we're even higher now. And that, we didn't make a new relative strength index high, and that's another divergence. So this is actually, at least in the short to medium term, definitely in the long term it's bullish, but in the short to medium term, this is not looking bullish at all. In fact, we're looking, and this is on the weekly, right? This is a weekly time frame. We are looking at some pretty big weekly RSI divergence with the price actions. So be very careful. That is the current setup that we're in heading into next week. The other thing to look at is the amount of stocks that are above the 50-day daily moving average compared to the price action. And right now we are at all-time highs, whereas we actually made a steep drop, right? Again, another divergence where the amount of the stocks that are over its 50 DMA has just plummeted down, right, to the 50 mark. And this is what you call a leading indicator. It tells you what may happen in the future ahead of time, right? And if you look at when we've had massive drops like this, they have portended the drops that have followed with the price action. Like here we had double drop and that portended this. And now we have this drop here. Is it portending this? You tell me, but I tend to look at this as a leading indicator and signs that we are going to have a correction. And, is this the top in the correction? Nobody knows, right? We're going back to this. Are we going down here right now? In the longer run, yeah, we will have to, but is that coming in next week and next, month even? Hard to say, because look at the time horizon here, right? We're talking about almost 100 years. So you can't take this and apply it to next week, next month, but you can apply it to the yearly level. And so we are looking at these divergences. In other words, next week and the next couple of weeks actually is going to be telling, right? It's going to be telling to see what is going to. In other words, the next couple of weeks are going to be very telling. Also, we're entering seasonality where typically August and September does not go well for the stock markets. Why? Because the traders have come back from the Hamptons and are back at their desks, right? What they do is sell after they take, as they take profits. Okay. You might be wondering why the market keeps going up and up and up. And, it is a thing, right? Like when markets get frothy and everybody's just buying, we've seen this activity behavior before. And the most recent one was what happened right before the COVID crash, right? That was another time when the markets just kept going up and up and up, and everybody was kind of actually just scratching their heads like, why is the market continuing to go up? But okay, let's just continue to make it go up until boom, it popped, right? And we had the most drastic drop ever. Actually, it dropped. The pace of the drop during the COVID crash was actually even faster than the Great Depression crash. And if you look at the chart, what happened back then, COVID was announced on January 30 in 2020 as it was declared, COVID was declared a global emergency, right? And what did the markets do? It just continued to go up and befuddle everybody. And notice it also made RSI divergences as it made new all-time highs, right? Didn't get up as high as it used to. And what happened? Well, we had that record crash. And as I said, this crash was, the ferocity of this crash was even greater than the crash in the Great Depression. So that tells you, right? In fact, it was the most, violent crash. One of the most, if not the most violent crash we've ever seen, right? In those few weeks. So be careful there, folks. Now, all of this is happening against a backdrop of increasing debt, but this is not new information. We all know that the United States is just printing money to oblivion. But I just want to point out here that, most recently, right here, that was actually when we had the tariff stuff happen earlier this year, right? And ever since then, we've done another vertical line. We've added, look, this much is almost $1 trillion. We've almost added $1 trillion in debt in just a few months, right? Like a little over a quarter. We've added $1 trillion of debt. That is scary, right? That means we're on track to add trillions of dollars of debt every year. And with the signing of the new bill, the BBB bill, it's going to start because it's front loaded to the front, right? And it's offloaded to the back when, I guess he's not anymore president, so he doesn't have to deal with the bad stuff afterwards. Look, this debt spiral is accelerating, and all the talk that you hear, including stuff from Jamie Dimon and Ray Dalio and all the guys, Warren Buffett, you see what he's doing, continuing to raise more cash. It's just a continuing sign that it's accelerating, right? It is not being put under control. In fact, it's spiraling out of control. And so we're playing dangerously close to what I think is the end game. And the end game and the big crash, the one that will actually be the crash, right? Which is maybe not right now because we don't see it, but it will be soon, I think, perhaps end of this year into next year, is when the sovereign debt bubble pops, right? Not the AI bubble. I mean, that's going to cause a crash. We might recover after whoever, depending on what the Fed does, and print even more money, right? In a panic because of that stock market crash. And if they do that and we print more money and have more inflation and more debt, and then the end game happens, which is the sovereign debt bubble pops, right? That's the end game one. And then all bets are off. You better be in other things such as precious metals, some BTC, and other things that'll hold its value as the system essentially resets and you have access to these instruments that'll be the bridge into the new system once it emerges, right? You want to put your store of value into these assets and instruments that can serve as bridges from the old into the new system. That is the name of the game. You don't have to time it perfectly. You got to just kind of be sort of right? Within 6 months, do it right, and you'll be able to transition into the new monetary system, right? Without losing your purchasing power and your store of value. Now, moving along over here, yeah, I just want to show. So, there's the Buffett Indicator. I mean, there's no shortage of charts that are showing you and fundamentals that are telling you that the markets are very expensive right now. I'm just going to do two. I'm going to do like 2 new charts every new episode just to show you, right? Every which way you look at it is the same answer. This one is a price to peak earnings ratio, right? And in here, we're looking at, we're almost approaching what was the previous high, which again was the NASDAQ stock, .com bubble. We're way above the historical median. You look at another chart, which is the NASDAQ adjusted for M2. So this takes into account the M2. So some people are saying, oh, you can't use these things because, we printed new money in the new world of money printing and digital money. Well, no. Well, if you just adjust it for the newly printed money, we're actually higher than where we were during the massive tech bubble, right? So it doesn't matter how you want to look at it. And sorry if I realize that there's it's in the afternoon today. So, and I'm not in my mom's basement. It takes a little bit for the camera to adjust. But basically, look, every which way you look at it, it's like when you go to a court, right? And you got different witnesses who were there at the situation, right? And they all kind of say the same things. And these witnesses are like from totally different backgrounds, don't know each other, and, but yet they're saying the same. It's called the corroborating witness in court, right? And that makes the strength of the case that much more believable. And that's essentially what's going on. You got different ways of looking at how expensive the market is, different ways, and completely unrelated to each other. And they're all saying the same thing, right? And they're all not only saying the same thing, they're saying we are either at or have gone past previous all-time highs. So either all the witnesses are lying, right? And somehow they saw something that's completely off, or, which is more likely, they're all probably saying the same thing, which is right. And it's just a matter of time, folks. Now, one thing I'm still continuing to watch, right, is what's going on with the housing market. And this chart's been going around. I just want to bring it up again. Look, sellers, right, have come to the market. They need to unload. They're trying to sell now, right? They're trying to sell. But nobody wants to buy. You have this huge gap, which is bigger than the previous another all-time record we're breaking, where there's a lot more sellers and nobody wants to buy. And so simple law of supply and demand here. You got a lot of supply, you got a little demand, price got to come down. Prices haven't come down yet. Why? Because nobody's buying or selling. Why? Because prices are too high and they can't come down because mortgage rates are still too high. Meaning people who are currently in houses, if they sell their current house and move in and buy a new house, well, mortgage rates are really high, especially if they got in when mortgage rates like 5 years, 6, 7 years ago was a lot lower. They're going to buy a new house now and pay like a mortgage rate 2, 3 times of what they paid 7, 8 years ago? No, they're not going to do that, right? So they're just waiting. Everybody's waiting for mortgage rates to go down, and that's going to unleash, like I said in my previous episode, the dam is going to come down, the water's going to flow, every minute's transactions going to go up, and that means prices are going to go down, which is why, counterintuitively, lower mortgage rates will lead to lower home prices, not higher home prices, okay? So when that happens, expect the amount of buyers to increase, right? As well as, I would say, the sellers increase as everybody unloads, but that means prices will be going down, which is actually a healthy thing for the market. Why? Because nobody can buy a house anymore. Look at this. Another all-time record. Man, just to show you the imbalances of the market, no matter the housing market, the stock market, the bond market, doesn't matter what market, we're hitting new all-time highs in terms of discrepancies. And this one is telling you nobody can afford to buy a house, right? Based on your qualified income and median household, nobody can afford to buy a house. That's going to change, right? Because that can't last forever. That means everybody's getting poorer. They can't spend money. They're on rent. And speaking of which, let's talk about everybody getting poorer. This is just all types of debt that people have. Credit card debt going up, right? Auto loan debt going. So everything is curling upward. Last time everything was curling upwards was 07, 08. Again, not good times. 07, 08, right? Great financial crisis. The one thing I wanted to show you here is the student loan debt, because they changed the law now, right? And so now everybody's like delinquent, or the increase is skyrocketing. Nobody was delinquent because they put a moratorium on it. And then now all of a sudden everybody, is delinquent. That is a vertical line, right? Remember, this is 90 days delinquent. So look at this simple one with credit cards. 12.31% of people are 90 days delinquent on their credit card bills. So if there's 10 people in the room, more than 1 out of the 10 people is over 90 days late on their credit card. And that's just credit cards, right? Then you get auto loans, and they're all curling upwards. This is all telling you that the consumer is tapping out on their debt. I mean, everything is debt-based, right? We were in a world for decades where you were rewarded for taking debt, right? The more debt you're able to get, all right, the more you were rewarded, right? So pull forward demand, spend money that you didn't earn, get debt, and just spend, and try to increase your debt as a consumer, that is, right? Forget about companies and countries even doing the same thing. We're talking about the individual consumer. That's been going on. They're tapped out. Like, this amount of debt since 07, 08, which was the last cycle where it cycled and it topped out, we're there again, right? And so what does that mean? Well, with high inflation, and remember, CPI, which hasn't been continuing to go up, never went down, right? So if eggs, let's say, I don't know, steaks, right, started going up in price the last 3 years after COVID, right, with all the money printing. So steaks used to be $10, now it became $15, right? And they're saying now, oh, well, inflation is low now, right? Inflation is low now, Fed needs to cut rate. Hey, buddy, it's still $15. It didn't go back down to $12. That steak is only $15. It's $15 now. It's just now that it didn't go from 15 to $20. It went from 15 to $17. That's what you mean by low inflation. Hey, you still are paying $17 for that $10 steak. You're still poor, my man. Don't get this. People are like, oh, inflation is low. No, inflation is not low. It never went backwards, right? Whatever price increase McDonald's, your meal at the restaurant used to be 20, now it's at 40. It didn't go back down to 20. It's still at 40. In fact, it's still going up. Now it's like 42. It just didn't go to 80. So everybody's still poor. Just get that straight. Don't let this low inflation thing make you think like everything's good. No, it's not good. What we need is either wage growth to outpace inflation so you feel richer, right? Or deflation, which is not a good thing, but at least prices to come back down, actually, like instead of just staying at where they were, to actually decrease maybe. But you don't want deflation. Nobody wants the Fed doesn't want deflation. The only thing that scares the Fed more than deflation is stagflation, which is where we're headed. Now, if we look into the zoom into student loans, you will see that, and this is amazing because you got people who are 40 to 49 years old, I mean my age, right, who have student loans. They didn't pay off at my age, or maybe they went to school late. I don't know, but dude, this is not good, right? So this is going to impact spending. And the last thing I wanted to talk about is what is going on with the gold market. So like last week, right, like on Thursday, I think it was, Trump came, another one of his right field blows. All of a sudden, he's going to tariff 1 kilo gold bars, right, impacting the refining hub in Switzerland. Now everybody's been talking about gold reevaluation, and it might happen and all this stuff. And as you know, I had gold for 3 years and I totally like loved it. And I cashed out a couple of weeks ago and realized my, 2 to 3 times profit on it. I'm just waiting to see what happens here, right? But one of the reasons why I'm waiting to see what happens here is because I'm not so sure what's going to happen here. So it's always good to, take profits when you're not so sure. And, we'll do a little live action here, but look, this is a daily chart of gold, okay? Daily. Like what happened on Friday was we had this bar where it kind of just did nothing, right? It kind of went down, went up, and just ended the day flat pretty much. But look at that volume. And this is what I mean. Look, gold's been doing nothing for, many months now, right? This is why I'm like, dude, either it's consolidating for a move up or, this is going to Wyckoff distribution going to go down. I don't know. I'm going to stay out. You tell me what it's going to happen. I'll go back in or wait further. Here's the thing. That volume, right, probably driven by what Trump was saying, right? So there's a lot of transactions that happen because of that. You want to take a look at, let's take a look. We haven't had that much volume. Look at that. Look at that. We haven't, no. This whole year with the whole tariff and everybody like buying gold remember that whole gold shortage from London to New York and all, we never approached, right, that amount of volume. In fact, look, I gotta go way back. Look, we still, no, right? Look, we haven't had this much volume going back, nowhere near. Let's go back further. Where are we going now? Wow, now we're going, where are we going here? Back 1 year. Look at this. We haven't had this much volume, right? It's not even close, folks. Look, I'm going to keep scrolling back. Where was the last? Oh, there we go. The last time we had that much volume, we got to go all the way back in 2022, right? Where what happened? This happened after it kind of consolidated over here. Look familiar? Well, what is this telling you? Let's zoom back in here, okay? What is this telling you here? Well, what it's telling you here is that, hold on, let me get this straightened out here. This much volume happened, no movement in price. So that means a lot of buying and selling happened, but the price didn't really change based on that news that Trump came out. Now, usually when you have that tariff move, you would expect gold prices to skyrocket as everybody go, buy. It's going to get more expensive. The price is going to go up. That did happen. There was a lot of buying that occurred, but there was even more selling into the buying strength, right? And so that's why it's a red bar. So that even if the buying was a lot, there was even more sellers who made the prices go back down. And so that's why we had a red volume bar, which means there's a lot of sellers in the stock market and in the gold price action in the spot market, which means there's a cap on it, which means be wary out there, right? If the Iran-Israel war didn't make gold reach new all-time highs, which it should have, because that's straight up like what gold explodes on, like Iran-Israeli, like straight up war with bombs to each other. That didn't make new all-time highs for gold. And now tariff, threats, ongoing with, that doesn't make a new all-time high for gold. That is a clear indication to you that there's something going on where gold can't make new all-time highs when it should. And so that's something to be careful of. So as we head into the next week, keep in mind, right, The room. We are in a very, very, very crowded movie theater, right? The film's rolling, everybody's having fun, woohoo, right? And watching the movie, but it's mad packed. It's starting to get squishy. It's very hot, stinky, all right? I'm just very close to the exit door. I've made my way with 1 foot out of the exit door because that stampede, because of how crowded everything is, when that hits, I want to be the first. I'm already half out and I want to just be out of the building before everybody else tries to get out, right? So that's, if anything, the message I want to share with all of you who are watching this video today. And it is it's a damn scary thing. So having said that, everybody have a blessed day today, and I hope you have a great week next week. Peace.